Bitcoin is acting strange, and not in the way crypto investors hoped. The world's most famous cryptocurrency has plunged 44% from its October peak, slipping below $70,000 for the first time in 15 months. Now, on the surface, this kind of crash isn't shocking. Bitcoin is famously volatile, and it has survived far worse collapses in the past. But here's what's really puzzling. This 4-month slump is happening at a time when Bitcoin should be thriving. For years, crypto believers have pushed one powerful idea, that Bitcoin is digital gold, a safe haven asset investors run to when the world feels unstable. And let's be honest, the world feels unstable right now. Global tensions are heating up. President Donald Trump is threatening military action against Iran. The US has removed Venezuela's leader. Trade disputes are flaring up with Europe, Canada, and South Korea. At the same time, massive advances in artificial intelligence are shaking Wall Street. AI tools like Anthropic's Claude are already performing complex legal tasks, sending tech stocks tumbling and spooking investors. Fear is everywhere. CNN's Fear and Greed Index is deep in fear territory. The VIX, Wall Street's volatility gauge, recently hit its highest level since November, when markets panicked over messy economic data and Nvidia's earnings. And when fear rises, investors usually rush to safety. That's exactly what's happening with gold. Gold prices have exploded, smashing through $5,500 per ounce, as investors pile into the ultimate safe haven, a physical asset that has held value for centuries. But Bitcoin? It's being left behind. Despite all this chaos, Bitcoin is down 20% this year. Some investors are even selling their gold and silver holdings to cover losses in crypto. Legendary investor Michael Burry, famous for predicting the 2008 financial crisis, recently suggested that Bitcoin's decline may be forcing crypto bulls to liquidate their metal positions. This crash has also erased the entire so-called Trump bump. After Trump's victory in November 2024, crypto markets surged. Investors cheered his pro-crypto stance and his promises to roll back regulations that once targeted digital assets. That optimism has now vanished. So what's driving this new crypto winter? At its core, it's a crisis of belief. Bitcoin is being treated less like digital gold and more like a risky tech stock. In a risk-off environment, fear isn't pushing people to buy Bitcoin, it's pushing them to sell. The contrast is brutal. Gold is up 24% since October. Bitcoin is down 44%. Even Washington isn't offering reassurance. Treasury Secretary Scott Bessent recently told Congress that the U.S. Treasury has no authority to stabilize crypto markets, sending another wave of anxiety through investors. Bitcoin ETFs also haven't delivered the institutional flood that bulls expected. Big investors are pulling back, trading volumes are shrinking, and that's amplifying panic among everyday traders. But before writing Bitcoin's obituary, history offers a reminder. Crypto has been pronounced dead many times before. In 2014, prices collapsed after the Mt. Gox hack. In 2018, Bitcoin crashed 74% when the ICO bubble burst. And in 2021 and 2022, regulatory crackdowns and the FTX scandal crushed confidence. Each time, Bitcoin came roaring back, usually within 18 months. So the real question isn't whether Bitcoin is crashing, it's whether this is the end of the digital gold narrative, or just another brutal chapter in crypto's long, volatile story. And if history is any guide, the next move may surprise everyone.